This is the Asia Trade. I'm Shery.
I'm Avril in Tokyo. Your top stories this hour. Asian stocks set to follow Wall Street lower as better than expected U.S. economic data clouds the outlook for future Fed cuts. The S&P 500 dropped for a third straight session in its longest slide in a month.
President Trump advances plans for American investors to buy TikTok's U.S. operations from ByteDance, valuing the unit at $14 billion.
South Korea will start trading the won on a 24-hour basis sometime next year and ease restrictions on trading between non-residents.
Plus, we'll be speaking with the AI startup Wayve after NVIDIA announced plans to invest millions of dollars in the company. But just minutes ago, topping our day today.
Throw out the rundown.
Yes, let's get to the tariffs because President Trump just announced 25% tariffs when it comes to those truck imports from October 1st. And this is on all truck imports coming from all of these different countries. And he's saying that this is in order to really prepare truck manufacturers from unfair outside competition and protect them, of course, from this downside that they've seen recently. We have, of course, continued to follow all of these tariff news around steel, aluminum, and, of course, trade negotiations with other countries still ongoing.
Including South Korea and, to some extent, Japan. And along with this, we're getting data right from the U.S. showing a more robust economy. Upward revision on the second quarter. This is thanks to strong consumer spending. So it does make you wonder, when do we actually see these impacts from tariffs on the U.S. consumer? And then that kind of goes against what the likes of Trump and even some of these Fed speakers are calling for, right? These rate cuts.
And despite the economic data still holding up, we have seen those valuation concerns over in the U.S. Take the S&P 500 down for a third consecutive session. Of course, this after a $15 trillion surge already. We saw the dollar rising to the highest in about 3 weeks. Shorter-term yields also climbing, given, of course, what Avril mentioned when it comes to the resilience of the economy. We also had jobless claims staying pretty solid.
Yeah, and then we saw that rebound, as you say, on the greenback. So what we're going to be watching on the session today as well is dollar yen, right? Because yesterday we saw how it broke through the 200-day moving average. Does it move past the 150 level? Does this help Japanese stocks? And of course, we had the JGB 40-year auction yesterday that passed safely, and there was firm demand, higher than the 12-month average. A couple of things that are helping it along here, including the lack of extreme remarks from the LDP, one of the contenders, Sane Takeichi, right? So MOF also talking about how they're going to reduce the issuance for October and December for these long-end bonds. But we are, of course, hearing from some of these Fed speakers as well, including the Dallas Fed President Lori Logan, and her comments about how they should transition to beyond the benchmark Fed funds rate at the moment. That actually led to a move in the 2-year yield. Have a listen.
My view is not one of enormous economic pessimism. I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
And of course, that was the new Fed Governor Stephen Meyer, and they are talking about his argument for greater rate cuts, which, of course, is sort of undercut by the latest economic data, not to mention, of course, the latest tariff news that we got and potential implications for inflation. For more on all of this, the Fed outlook, market impact, and, of course, new tariffs, let's bring in senior editor for markets and Bloomberg opinion columnist John Authers. John, great to have you in Tokyo, but also what a perfect timing, because just 5 minutes before we went on the air, we got these news about new tariffs on truck imports. We still have to sort of analyze what that would mean for the U.S. economy. But overall, when we see all of these news around new levies, what are the implications for the economy?
Right, the implications for the economy can't be great. There is an impression, after we seem to be getting an element of stability for a matter of months on tariffs, as though what in fact we're doing is still playing the game of whack-a-mole, that somewhere else in the trading system the authorities are finding that there's a problem that's been created by the tariffs, and so they're needing to impose fresh ones. I mean, all of the main manufacturers of trucks are from countries where they've already been some kind of a specific deal. So this is some kind of a tacit admission that more needs to be done. The other point I would make is one of the big complaints, obviously I haven't had the time to sit down and analyse this carefully, so this is just a preliminary, the main question in my mind. One of the main complaints that you hear from Detroit, from the US makers, is about the steel and aluminum tariffs, which have put them at a competitive disadvantage to competitors outside the States because they have to pay more for their steel and aluminum than their competitors. They are the one, and this means that in fact you might be protecting US steel makers, but you're actually hurting the people in the US who want to buy and use steel. So it's possible to me that this tariff on trucks is a necessary remedy because they now realise, the authorities now realise the damage they've done to their native trucking industry by imposing metals taxes. So ultimately, if you look at this and think, good grief, this is a mess, I'm inclined to agree with you. It isn't market positive.
Tariff on top of tariff on top of tariff.
Yes.
And then it comes in varying on the day and the week, right? As we
Yes.
try to count the cost of the damage from these tariffs, what's been interesting is how markets are behaving like, that doesn't matter.
Yes.
And do you think this comes along as long as we keep getting these expectations of a dovish Federal Reserve?
It looks as though we probably do, but you do need to have a caveat on that. Obviously, all other things equal, markets always like lower rates. But the caveat, all economic questions presuppose that all other things are equal. If we need to cut rates because the economy really is moving into trouble, that isn't so great. We're in the very rare situation where stock markets are at an all-time high, and yet bad news is good news, i.e. that we're at an all-time high and yet we're desperate for bad economic data so that will mean rates come down. That, in my mind, we're also at a situation where gold is also at a record. Which implies to me that this is not a rally we should totally trust. Speaking as somebody, did I really think that we were going to be back at an all-time high by now, or just below now after the last few days, but basically at an all-time high? When, 6 months ago when Liberation Day happened, of course I didn't.
Yeah.
I was wrong about
and
this.
And you're not the only one who's been fooled here. And
Yes.
I think a lot of the rationale behind that push higher has also been the exuberance over AI, that this will continue, which really makes me think, what's the difference from earlier this year in January when DeepSeek came out and the efficient models were, we thought perhaps not so much investment is needed. And all of a sudden you're again back to the narrative of, yes, a lot of money will be needed.
That is another fascinating question, which it's hard to answer. You also had one brief market break when MIT had a survey. Do you remember this, where they had talked to companies who had been implying
monetization?
And almost none of them had actually managed to make any money out of adapting AI, and that was about a 3-day event, and then we moved on from there. I do think NVIDIA's continued success in selling quite incredible amounts of chips at very high profit margins does have something to do with it. We're at the point where NVIDIA is almost... People in the markets refer to the NVIDIA results as a macro number these days. Like, we need to know about unemployment, we need to know about inflation, and we need to know how much money NVIDIA made last quarter. And I suppose the evidence that the very biggest companies plainly are doing an immense amount of business backed on AI is taken as a very positive signal that AI is going to make a difference. Again, the jury is out on this. I don't think this is a bubble like .com, which I covered earlier in my career. It's not a question of madness about in the markets. It's a question about whether the people buying the chips It's not buying the stocks that is potentially a bubble, it's whether people are just buying far more NVIDIA chips than they will ever in fact be able to use profitably. That's where the bubble might be. And we don't know the answer to that yet. But while people keep buying those chips, it appears the market can stay upwards.
John, it's been really great to get perspective from you, talking us through all this, including the market implications. Senior editor for markets and Bloomberg opinion columnist John authors for us. Now, we have some breaking news as well. We are hearing that the former FBI Director James Comey has been criminally indicted in the U.S. And this is on 2 of 3 counts that have been sought by prosecutors. This is according to ABC News, and they've cited unnamed sources. Comey has been indicted on 1 count of making false statements and 1 count of obstruction of justice. And this is coming just days after the U.S. president issued a public demand for the Justice Department to act now, in his words, to bring prosecutions against Comey and some other political rivals.
And we'll get you more on the latest developments on that front. But so far, we have seen President Trump also advancing plans for American investors to buy TikTok's U.S. operations from Chinese owner ByteDance. Beijing is yet to declare publicly whether it's given approval, though Trump says he was given the green light.
This is interesting because I had a very good talk with President Xi. A lot of respect for him. Hopefully he has a lot of respect for me, too. And we talked about TikTok and other things, but we talked about TikTok, and he gave us the go-ahead. You know, it's run by American investors and American companies.
For more, let's bring in our Asia tech correspondent Annabelle Jewelers in Hong Kong. Belle, so what was in the executive order?
Yes, in the executive order, it essentially acknowledged or stated that there is a plan in place that meets the conditions for TikTok to continue operating in the US. So it says that there's a framework agreement in place where the app is going to be essentially operated in a joint venture structure that will be majority owned and controlled by Americans. So you can see here President Trump signing that executive order just earlier today. ByteDance, as well, it's contained in the order. It says it's going to take less than a 20% stake, and also that there's going to be a new board of directors that will be established to run TikTok's US operations. Just who the eventual buyers are, that part is still not exactly clear. But what we've heard from sources is that Oracle and Silver Lake, they continue to be the names that are coming up. MGX is actually another one that's come up. This one's new, but it's an interesting one because it's an Abu Dhabi-based sovereign or state-owned investment firm, rather, that does have a big focus on AI and advanced technologies. Another loose end, of course, is just the price tag of this and the valuation. J.D. Vance, Vice President, spoke about this earlier today. He's someone who played a central role in this, but he says it's going to be valued at $14 billion, which is quite far short of where was initially expected.
Well, as we said also that there hasn't been public response from the Chinese side. So how seriously should we be taking all this?
Yeah, it's a difficult one. I mean, certainly the framework of the deal does seem to at least meet what would have been one of the key conditions for China, which is that the technology, the actual algorithm, will stay in Chinese hands. Just a copy of it is going to be licensed to the operations in the US. But China, as you said, it's yet to say publicly whether it's actually granted approval for this, even though you heard from President Trump there saying that the President Xi had given the go-ahead when they spoke last week. The Chinese embassy as well didn't respond to our request for comment. But we are coming up against another deadline for this one. So the deal does need to close within 120 days. That takes us until the end of January. We've already seen a number of deadlines for this, or deadlines being extended, in fact, 5 extensions. But it is something that will have to get past China. It's also something that's going to have to get past US lawmakers, who are still promising to very closely scrutinize the contents of that deal as well.
Annabelle Jewelers there with the latest on TikTok, and perhaps something that could be consequential for some of those imports coming from China. We are now hearing that the U.S. will be imposing 50% tariffs on kitchen cabinets, bathroom vanities as well. We're talking about 30% tariffs on upholstered furniture as well. So we continue to see the implications of these new tariff developments around President Trump. We had already heard of plans to impose 25% tariffs on truck imports from October 1st, but the latest coming from President Trump being 50% tariffs on bathroom vanities, 30% on upholstered furniture, 50% on all kitchen cabinets October 1st. This, of course, could have implications for inflation, not to mention the very hot housing market that we've seen in the United States. April.
Yeah, Shery, it's interesting, right? We were just discussing with John when it comes to these tariff impacts. It's the stock market run that has not showed signs of slowing down, driven by tech. So coming up on the Asia Trade, we're going to continue that tech conversation. The UK-based AI startup Wayve joins us to explain their growth strategy after a $500 million investment from NVIDIA. Plus, B Capital gives us the VC's perspective on investing in tech and AI, Shery.
And in this month's episode of Bloomberg Tech Asia, we'll look at the rise of robo-taxis with Baidu's autonomous driving unit, Apollo. Much more ahead. This is Bloomberg.
You're watching the Asia Trade. Here are some stories we're following. The U.S. is launching a campaign to overhaul global asylum rules it says are outdated and abused. Deputy Secretary of State Christopher Landau says too many claims are based on economic hardship rather than persecution. The move follows President Trump's UN speech calling for tougher controls on migration.
The European Union is aiming to finalize free trade agreements with Malaysia, the Philippines, and Thailand before 2027. The bloc's trade chief notes that the EU accounts for only 10% of ASEAN trade, despite being the region's second largest foreign investor. Malaysia is also seeking to fast-track tariff negotiations with the U.S. ahead of President Trump's visit to Kuala Lumpur in October. The White House previously announced 19% tariffs on Malaysian goods, separate from sectoral levies.
Yeah, Shery, let's take a look at how geopolitics has been playing out on commodity prices as well. For much of this week, it has been about the concerns about Russian incursions, their jets, into NATO countries' airspace. And we have been seeing sources telling Bloomberg that NATO countries have been signaling to Russia that they're going to start shooting down jets. So that is a key concern. We actually saw oil prices reversing losses following Bloomberg reporting, Shery.
Yeah, let's actually bring in Bloomberg senior editor Derek Wallbank with the latest on this. Derek, what do we know so far on the escalating tensions between Russia and NATO?
Yeah, Shery, it's been a bit of a continuing escalation overnight since we spoke the other day. And look, here's basically where we are. We've had several situations where there have been overflights in NATO airspace, and NATO leaders have been quietly warning their Russian counterparts that there is a possibility that there could be something more than just monitoring and sending them out, possibly up to and including downing whatever goes and strays into the different airspace. You know, you get to the point where airports have to watch out and consider closing and other things like that. And NATO leaders are feeling like they may need to respond further. The flip side of that is that Russia has responded basically saying that would be a massive escalation and it would come with its own consequences. It's a major geopolitical tension point to watch going forward. At the same time, Donald Trump is continuing his push to get people to add pressure on Russia, you know, suggesting to Turkey that it needs to cut off its purchases of Russian energy.
At the same time, Derek, Trump is also ramping up his tariff fight. I know you've been busy in the past hour or so with reporting on this. What do we know?
That's exactly right, Avril. Those stories are coming onto the wire hot and fast. Some of them have my name on them, and here's what we know right now: is we are looking at a 25% tariff on heavy trucks entering the United States. That would launch October 1. We're also talking about a 50% tariff on kitchen cabinets and bathroom vanities and things like that. It's a continuing escalation of Trump's tariff fights that that we have been, seeing going forward. There have been legal challenges to the broad-based national tariff scheme that the White House has put forward, and so we had expected the Section 232 kind of sectoral tariffs. If I sort of say one side is a country tariff, where you say anything that's coming in from this country, we're going to tariff at a certain level. This is something different. This is saying that each product that's coming in would get this level. Now, it matters how these things are done, and we're looking for paperwork on that. When we have that, we'll put that on the wire as quick as we possibly can. But it matters heavily how these are structured. Sometimes those are in addition. Sometimes it doesn't stack on top of that. So people will be looking to see what these effective tariff rates are. But overall, this is a continuation and indeed an escalation of the president trying to make sure that he is propping up the domestic industries in the United States that he sees under threat, and that is a core part of his economic program.
The rhetoric of protecting American industry. Derek, thank you so much. Bloomberg senior editor Derek Wallbank. We'll have more ahead on the Asia trade. This is Bloomberg. President Lee Jae-myung of South Korea has announced that the government is moving to open its foreign exchange market on a 24-hour basis and ease restrictions on won trading between non-residents. Let's bring in our executive editor for Asia Markets, Paul Dobson. So, Paul, this move was one that was anticipated, but there are going to be potential implications. What are you watching? Maybe does this make stock market trading a bit easier as well?
Yeah, hi there. Good morning. Well, that's part of the intention. I guess what South Korea wants to do is to align its FX markets with other developed market peers by having 24-hour trading. It's the sort of thing that you would expect from the likes of the euro, the dollar, the yen. And South Korea wants to get into that league. And part of that reason is because it wants the stock index to be included by MSCI in its emerging markets. In its developed markets gauge rather than its emerging markets gauge. So in order to secure that upgrade, it's been under pressure to implement more measures that open up the FX market, make it more transparent, make it more liquid, and make it 24 hours as well. So it's a path that South Korea's been on for a while already. Last year, it already extended the trading hours somewhat, but getting all the way to 24 hours is hopefully, and putting in place the reforms that go with that, hopefully the last thing that it needs to do in order to secure that upgrade to developed market status. And, this is part of the South Korean government's push to sort of expand its financial markets more broadly and increase international participation.
Paul Dobson, our executive editor for markets, as we continue to watch any market implications from the latest tariff news coming from President Trump. Now, the latest headline right now is 100% tariffs on branded, patented pharmaceutical products. This, of course, a very big industry when it comes to the U.S. Lots of imports coming from the likes of India, for example, Avril. So we're watching all of these different tariffs, including, of course, on those imported trucks earlier as well.
Yeah, and to what Derek was highlighting earlier about how this is about protecting American industries, or at least that's the rhetoric. Trump is saying that there will be no tariff on pharmaceutical products if construction has started. And of course, we know how he has been trying to draw investments back into the U.S. We'll continue tracking that story as these developments on levies come in fast and furious from the U.S. president. We'll have more ahead on the Asia trade. This is Bloomberg.
We're following some of those home construction names after President Trump announced those tariffs on kitchen cabinets and bathroom vanities, not to mention upholstered furniture as well. We also had news about 100% tariff on branded, patented pharmaceutical products, no tariffs on pharma products if construction has started. So we're still trying to figure this out, Avril, what these new tariffs mean, of course, especially given the broader economic inflation trends that we're also watching in the U.S.
Yeah, and it does look like so so far, these American companies have been absorbing the costs of these tariffs, right? So when does that break? And we see that showing up more meaningfully in inflation numbers, especially at a time when consumer spending still seems pretty strong in the U.S. And to help us unpack these latest announcements from the U.S. president on tariffs, we have John Herskovitz with us in the Tokyo studio. So we're hearing about tariffs on kitchen cabinets, pharmaceuticals as well. But talk us through on heavy trucks, kitchen cabinets, the move to impose this. What's the thinking behind this, you think?
Sure. With the trucks, Trump has said this is part of national security. And we have some really big domestic names like Peterbilt, which are part of the American culture. So 25% on trucks. And the tariffs are coming really fast. We haven't seen these sectoral things for a while. We're getting trucks, kitchen cabinets, pharmaceuticals. The trucks one is the 25%, but we don't have the details of how it's going to be implemented. So we have the headline number. It's supposed to be coming, I think, as soon as next week. But how it's going to be imposed is another matter. And again, this is Trump sees this as a way to protect domestic manufacturers.
And I guess you never know how these tariffs could end up, right? I mean, President Trump tends to threaten them, impose them, and then lift them. And the industries around that are affected by these tariffs, of course, is usually a very messy ordeal for them.
Exactly. So with the auto tariffs, we've seen so much back and forth with manufacturing in Canada, Mexico, the U.S., major manufacturers having to juggle those, manufacturers in Japan trying to figure out what to produce here, what to produce in North America. And we've seen some of the tariffs being rolled back. The EU auto tariff went from 25% to 15% retroactive, depending on some moves by the EU with U.S. products. So the back and forth goes on, room for negotiations, and we'll probably see the same with trucks and some of these other sectors before implementation.
This is also coming after Trump pretty much nudged the Commerce Department into an investigation on medium and heavy trucks, I believe. What does this tell us about the audience, perhaps the truck industry that he's trying to appeal to as well?
I think this is one of the iconic parts of American culture, the heavy trucks. And this is something which protecting these industries would be something that would appeal to his base. These are names that people know. They're part of the American landscape. And by doing this, by having the investigation, he can talk about the national security implications of protecting these industries. So it's a part of a larger package. But the thing is, it's all coming really quickly, and how it's going to play out over the next few days is something that we really don't know yet.
Yeah, and as with these tariff developments, it's always on unpacking that in the ensuing days and weeks. John, really good to get your insight so far on this. John Herskovitz for us. And we also had data coming out of Japan in the past 3 minutes. We got those Tokyo CPI numbers. And for the number that we really care about, the Tokyo CPI ex fresh food, so that's the core print, that is coming in line with the prior reading, but is slower than the consensus 2.8%. So we're seeing this number at 2.5%. It's still above the BOJ's target. So does that add to the idea that it can continue with its rate hike path? The headline number, Tokyo CPI on year, we're getting in at 2.5% as well, but this is also slower than the prior reading and the consensus estimates. Core, which is Tokyo CPI ex fresh food and energy, that is coming in also in 2.5%, similarly slower than the prior reading and the consensus estimate. Shery.
Right, Avril, over in South Korea, thousands of bank employees are set to stage their first strike in 3 years. They want higher pay and a shorter work week. Bloomberg Seoul Bureau Editor Danny Thomas is with us. And Danny, we know that President Lee has promised shorter work hours. So how much pressure could this apply on his administration?
Well, I think Lee Jae-min has very clearly outlined his plans and his vision, what he wants. I think the problem here is the management in many of these companies, they are not in favor of the shorter week. So we will see what kind of strength the bank employees will turn out today in the rally, and that would probably give us an indication of how much kind of public support or support there is for these kind of move. So we're expecting about 80,000 people to join, and even if half of that numbers come in, that would be a good show of strength here, because last strike we had in 2022, it's pretty low in terms of the turnout. So we'll see how the rally progresses around 11 o'clock, and that will be a key benchmark or key measure for how these protests will go forward.
Danny, to your point about whether we can see public support for this, there's also been the view that, this is a finance industry issue, that, this is just part of their complaints. How much public support is there? Because it does seem like quite an unpopular move.
Well, so last time around when there was strike went ahead, they really got what they wanted. They wanted a reduction in the business hours, which came in, but they had to reinstate it back when there was really public went ahead. There was an outpouring of protest against that. So the banks then reinstated their business hours. So it's not a very popular move, but at the same time, there has been linkage between birth rate and not having enough time to family planning and everything. So that is what causing these kind of new round of protests.
Danny, what are industries saying, given that, of course, this will affect businesses and their productivity and performance as well?
Yeah, so South Koreans work a lot. I mean, we have some OECD data that shows that even though they work very hard, the productivity is pretty low. And I think what Lee Jae-min is trying to push through is that can we work less, but at least we can be more productive. And in that direction, I think there's a bit of a consensus. And he's also made it very clear that he's not going to impose it unless there is a social agreement across South Korea in terms of how do we go ahead with it.
Danny, thanks very much. That's something we'll be watching later today. Bloomberg's Danny Thomas for that. The latest from the corporate front, Meta is reportedly in early talks to use Google's Gemini AI models to improve ad targeting. According to tech publication The Information, the move highlights Meta's struggles with its own AI and growing pressure to deliver better ad performance. Meta has spent billions on AI researchers and projects, but several stumbles have plagued its efforts.
Alphabet's Google is asking the U.S. Supreme Court to pause a ruling that would force it to overhaul Play Store policies. Google warned in a filing that without a delay, the company and its Android ecosystem will suffer irreparable harm. The move stems from its long-running antitrust fight with Fortnite maker Epic Games.
Xiaomi has unveiled a new smartphone designed to take on Apple's iPhone 17. The new device, called Xiaomi 17, will be offered in Pro and Pro Max models, just like Apple's marquee series. It'll cost around $630 to $840, more than $100 cheaper than the base iPhone 17. The move signals Xiaomi going after Apple in the most direct fashion, shifting the company's branding and timing to measure its products against the U.S. firm.
Bloomberg has learned that Citigroup moved nearly 1,000 tech jobs to India's business support centers following cuts to its workforce in China. Sources say the Wall Street lender shifted the jobs in phases over the past few months. Back in June, Citigroup announced plans to cut its technology workforce in China by about 3,500 as part of its global simplification efforts.
And Shery, we are really trying to unpack what we've been getting on the tariff headline front from the U.S. president, and pharmaceuticals now in the crosshairs, except if the manufacturing has already started. So October 1st seems to be the date to watch, because that is also when he has suggested we will see these heavy truck tariffs coming into effect. And not forgetting as well these kitchen cabinet levies, Shery.
Yeah. Vanities for bathrooms. We're talking about also, of course, those truck imports. What's really interesting about the pharmaceutical sector as well is we'll have to figure out where most of those imports come from, because we know that a lot of them come from India. We know a lot of them come from Europe. So if we're talking about 100% tariffs on those pharmaceutical products, what the implications could be for those countries. Already, we know that President Trump, tensions with India and Prime Minister Modi are running high. President Trump saying that but interest rates are also too high. He continues to weigh in on Fed Chair Powell and where monetary policy should go from here. Of course, a little bit counterintuitive if you think about these tariffs potentially boosting inflation concerns in the United States. But President Trump saying great numbers came out today on the economy. If it weren't for Powell, we would be at 2% right now, where interest rates are too high. Of course, if you cut interest rates, you could actually get a little bit more of a boost in those inflation numbers. We do get that PCE, the Fed's preferred inflation gauge, on Friday as well.
Yeah, but counterintuitive, as you say, Shery, given how we know that, the economy does seem to be humming along quite nicely. And he himself is flagging, right, that these numbers came out today on the economy, 3.8%. He's touting the success. So you can't have it both, I guess, if you're talking to any market watcher or economist. But here we are. We'll have more hit on the Asia trade. This is Bloomberg. Now, we've been tracking some of this autonomous driving developments. Our next guest runs UK-based AI startup Wayve, which develops autonomous vehicle tech, and they're backed by the likes of SoftBank, Microsoft, and Uber. And NVIDIA plans to invest $500 million in the company to accelerate the deployment and development of its AI model. Shery.
With us now is co-founder and CEO Alex Kendall. Alex, really great to have you here in the Tokyo studio. Japan is your fourth market where you're trying all of this. What are your latest initiatives?
Oh, it's wonderful to be here. I've had a fantastic week here in Tokyo. We started testing here 6 months ago, and already this week we've had the privilege of unveiling our first prototype with Nissan. So we've hosted a number of your colleagues and others for demo drives. And I think what this really shows is that the next generation AI approach we've taken to autonomous driving can help break down barriers in the industry and let AI generalize to new environments quickly and safely, like what we're seeing here in Tokyo.
With Nissan, is that the Pro Pilot? I tested that whole system. It's really interesting. You're trying to keep yourself asset light so you can work with more car makers.
That's right. Our business model is that we build our embodied AI foundation model. It's trained at extremely large scale to understand general purpose driving and all around the world with different vehicles, different use cases. And we license this AI to the most innovative fleets and automakers around the world. And it's awesome to see Nissan move quickly with a bold vision to bring this technology out in their Pro Pilot from 2027.
When it comes to the AI development, how exactly are you looking to accelerate the deployment and the development of it?
Well, specifically here in Japan, we're thrilled to be investing heavily. We've built an operational office in Yokohama. We've just announced that in a month's time we're going to be opening another office in Tokyo and growing our team to over 100 talented engineers and developers. And so the intention is for us to grow the site and grow our exposure because, of course, we've shown the AI can generalize to Japanese roads, driving culture, and now we really want to make sure we can industrialize it, working very closely in partnership with the Japanese automakers that, of course, are known for such quality and safety, something we really want to collaborate with.
Are you looking for more funding or financing, or are you happy with where things are at the moment?
Oh, look, we're really well capitalized as a company. You mentioned some of our investors before, and it's been awesome to partner with Masa and SoftBank. I took Masa for a drive yesterday around Tokyo, and it was a real honor to show him what we've been building in the last couple of years here in his home city. But of course, we're aiming to build a generational company here, really a long-term vision that we think embodied AI is going to transform so many different industries. And so inevitably we'll be looking for further investment to help grow our company in the future.
Why Japan? Because, of course, this market is regulated pretty heavily, right? I mean, you still need a human to supervise any self-driving. So do you see any of those hurdles that could affect you long-term?
Well, I actually met with the Minister for Land Economy and Tourism this morning, morning. We had a great conversation about our technology. He joined us for a demo drive, and I really think collaboration is really important so that we can bring this technology to market safely and securely. But Japan is, the premier automotive industry in the world. Rich heritage here, and as I mentioned, for me, just really excellent at quality and scale. So we're excited to be collaborating here, and I hope that we can bring complementary strengths with the embodied AI that we're building, which is at frontier scale for robotics, with, of course, the quality of product that the industry builds here. We hope together that we can bring world competitive products that can inspire the world and bring the benefits of autonomy to vehicles at millions of volume at mass manufacturing scale.
You're also working in the United States, and just this morning we continue to see the latest headlines when it comes to tariffs, when it comes to the tech rivalry with China as well. Given the uncertainty around the Trump administration, is there any concern for you as somebody who's so technology forward and with innovations that have yet to see the full spectrum of regulations, that things might change in the future?
Well, look, when I have conversations with global regulators and leaders around the world, I think there's a really broad and actually quite robust understanding that autonomy is going to drive so many benefits to the world. Of course, it's going to make our roads safer, but also make mobility more sustainable, accessible. And I think this is really well understood. The question is, how do we bring this out, and how do we ensure that it's done in partnership and safely? And so that's really where the conversation tends to lie. But I see full alignment that that's the future that we're all working towards. And so we just need to make sure we do that carefully and collaboratively.
China, of course, very advanced when it comes to self-driving, robo-taxis as well. Is that a market that interests you?
Oh, the Chinese market is moving so fast with this technology, and I really want to work with leading automakers. Today we work with automakers in Europe, Japan and North America to accelerate and build competitive products. It's difficult for us to launch our technology in China, unfortunately, due to the current regulations. But throughout the other markets I described, I think we can build something that's truly competitive and world-class.
So the next step would be towards robo-taxis, right, where it's kind of already in operation in China. How do you think the ecosystem in China versus in Japan compares?
Well, my experience here in Tokyo is that I think there's such a rich diversity of technology, of interest, and our intention is that I think we can build a product here that will really delight consumers. But we want to do this in partnership with some of the leading mobility brands here. The AI we build can scale all the way from level 2 to level 4 and 5, so from driver assistance to driverless technology. And today we are busy industrializing this technology with Nissan for a driver assistance product. And growing the performance and working with partners like Uber, like S-Ride, towards autonomous driverless operation as well. And I think that the range of autonomy will give consumers choice, but the benefits of robotaxis, of course, not just in urban areas like Tokyo, but think about rural areas where there may be no public transport or limited access. The great thing about our technology is that it does not rely on high-definition maps. And so in rural areas, there's no economic case to build a high-definition map. It's very, large-scale and diverse driving environments. And so our AI will enable our systems to be able to drive in these kind of environments, even if it's never been there before, or it's not mapped, and bring this technology to more people. And I think that's going to be really wonderful for countries like Japan.
And perhaps without the need of sensors that traditional autonomous vehicle systems actually require. Talk to us about the cost advantages. Can you put some numbers to it as you compare it to more conventional systems?
Of course. I mean, when you think about deploying autonomy at scale, it's all about intelligence first and foremost, and I think that's really what our AI brings. But then also lack of reliance on infrastructure like high-definition maps, and then being able to use lean hardware that's able to be in mass production. And with Nissan, of course, the prototype we've unveiled, it's less than $1,000 of hardware, so cameras and computers and a LiDAR that really can be produced at mass production scale. And I think this is what's going to enable this technology to be enjoyed by consumers all around the world.
Are some of those social issues something that you think about, the displacement of drivers, but also the need, given the demographic changes and the fact that drivers are becoming much older here across Asia as well?
Well, that's what I think the benefit autonomy can bring. I think as we see embodied AI grow, of course, starting with vehicles and automotive, but growing to many other applications as well, the opportunity is to create intelligent machines that we can delegate tasks to, free up our time from things we don't want to do, or things that might be difficult or hard for us to access. And I think this is going to be one of the most profound changes that we go through in society and bring enormous benefits to our lives. I can't wait, and I really hope that we have the opportunity to pioneer that with the technology we're building.
Alex Kendall, really good to have you here in our Tokyo studio. He's CEO at Wayve. And the global race for robotaxis is front and center in Bloomberg Tech Asia this week. We'll explore the massive opportunities for the sector and the challenges it faces in the next hour. For now, we have more ahead for you on the Asia trade. This is Bloomberg. Plenty to move the markets across the Asia trading session today, and what we'll be watching are those pharmaceutical names, especially across Japan and South Korea. Of course, we have seen President Trump now announce 100% tariffs on pharma products. He's saying that no tariffs will be implemented on products if the construction has already started. Of course, we have seen investments into the United States in this sector as well. But Avril, big questions about those Indian pharmaceutical imports, Europeans, and of course, we have a lot of Japanese names that work together with U.S. names as well.
Yeah, and you think about how companies in general, I mean, does this still make sense for them, given the tariff, the policy uncertainty, to be exporting still into the U.S.? And to your point about looking for alternative markets, perhaps Europe, perhaps other parts of Asia as well. And we have, of course, not just these drugs, pharmaceutical products that are in the crosshairs. Trump also really appealing to his base, right? Talking about how the truck industry, the great truck industry, in his words, the levy suggesting that this could provide some form of protection for them as well, given how that will be in place from October 1st, along with some of these furniture-related industries charging, for example, 30% tariff on upholstered furniture. So it's really sector-specific as things stand at the moment. And after hours, we are seeing some reaction in some of these related stocks. We'll track the markets open as well in Sydney, Seoul, and Tokyo next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens and bracing for any reaction in the markets when it comes to President Trump's new tariffs on truck imports, pharma goods as well. And Avril, we're still trying to figure out what these new tariffs mean for these countries that already have trade deals with the United States. Japan, for example, 15% when it comes to those auto tariffs. What will they mean if we're talking about 25% tariffs on trucks?
Yeah, and on top of that, is there space for negotiation, as is typical with Trump? And what does this ultimately mean for domestic industries? Does it indeed protect them when he's appealing to his base here, right? The trucking industry. So there is a lot at play as well, even as we watch for the markets open in the region.
Yeah, Hino Motors, Isuzu Motors, some of those names that we'll be following in the Japan session, given that they deal with those trucks and buses in the U.S. For example, Hino, 50% of revenue coming from those sales in the U.S. market. We are now seeing the Nikkei under pressure, 0.2% as the yen holds very, very close to that 150 level against the U.S. dollar. Remember, we had a big jump in the dollar by the most in about 3 weeks or so, and we continue to watch the JGB space as well, because we had 40-year JGBs rallying after an auction on Thursday. At the same time, we continue to get these inflation numbers coming out of Japan. Tokyo CPI, for example, which of course gives you an indication of where national prices are going, missing to the downside, 2.5% growth year on year, but still above that 2% inflation target by the BOJ.
Yeah, And taking a look at how South Korean markets are faring at the start of trade as well. Of course, something that we've been watching in terms of the Korean won is that relative weakness despite the resilience and the interest in the South Korean stock markets. Today, we are 1% lower on the Kospi, but aside from that, also watching if there's any move and market reaction to how the South Korean authorities are signaling the 24-hour trading of the local currency that could help make stock market trade even easier. Taking a look at how things are faring in Australia as well as markets open there. We have been seeing this market has been lifted by the commodity plays. Oil did reverse losses in the overnight session against the backdrop of yet more hawkish rhetoric when it comes to Russia. Along with that, how NATO allies have been signaling to the Russian side that they will start shooting down these jets. For the moment, we are holding steady on the Aussie dollar versus the greenback, just under 65 or 66 cents, I should say. The Australian benchmark actually not faring as badly as some of the other markets in the early going, Shery.
Let's discuss the tariffs. As we mentioned earlier, our top story, 50% on kitchen cabinets, bathroom vanities into the U.S. starting October 1st. Also 25% on truck imports, not to mention 100% when it comes to those pharmaceutical goods. Let's bring in Hinrich Foundation Head of Trade Policy, Deborah Elms. Deborah, great to have you with us. Break this down for us, because we thought perhaps with all of these trade deals now being negotiated or in place, that the tariff issue was something that we had moved past. What do these sectoral tariffs mean for ongoing trade negotiations?
Well, first, Trump is never going to be done with tariffs. So anyone who thinks that this is the end, or at any point that would be the end of his tariff game, is delusional. The man loves tariffs. He'll continue to use them. So that's the first point. The second is that these negotiations have been largely about what were called the reciprocal tariffs. That is, those tariffs imposed under emergency powers, originally on April 2nd, have been revised since then. That's where the focus has been. And what the Trump administration has been doing is moving more and more tariff coverage to these sector-specific tariffs on increasingly now everything, as you can see, including now the kitchen cabinet and the couch in the living room. I mean, this is an incredible, breathtaking expansion of tariff coverage that will affect everyone, including those countries that thought that they had a deal in place under those reciprocal tariffs that are not covered by these sector-specific new applications.
Picking and choosing which sectors the president protects among the American industries. How big of a problem is this when you have different levies contending with different ones, steel and aluminum in place, and now trying to perhaps help those car makers that are dealing with higher prices when it comes to metals?
Yeah, the complexity is honestly driving companies, supply chain managers, customs brokers right on off the edge, because every day is a new set of tariffs. We've had 28 revisions to U.S. tariff codes since the beginning of this year, 28 separate revisions, plus all of these sector-specific tariffs and the order and the stacking of tariffs. One sometimes stacks, sometimes doesn't. This product might, that product might not. I mean, it is mind-bogglingly complicated to trade with the United States now.
That is a good number to keep in mind, the number of revisions that have already been pushed through from the U.S. President, Deborah. But when it comes to perhaps how this is being received by the base, how much cognizance is there between the rhetoric and the tariff policy, that actual impact on these industries that Trump is saying he's supporting?
I think that's unclear right now. I suspect you're going to get a lot of very disgruntled Americans, regardless of their political base, when they try to go replace a worn-out kitchen cabinet, when they try to replace a sofa that's sagging, when they go out and they look for purchases, especially of their pharmaceutical products. 100% tariff on imported products for pharma is going to hit an awful lot of people, literally, in their bodies. So I think there will be deep unhappiness by consumers in particular in the United States, whether or not they work for these particular companies. So we'll have to see how this plays out. Clearly, he thinks it's an important way to drive manufacturing back to the United States. I think consumers who are sometimes in manufacturing, but most Americans are not in manufacturing. So most consumers who are not in manufacturing will say, why am I having to pay this enormous price for a few jobs for somebody else?
The countries that we are watching in terms of how their industries might be particularly affected include India because of its pharmaceutical trade with the US, and then the auto industry in Japan and South Korea. All this happening as these trade negotiations are still ongoing. What is the best course of action for them at this stage?
Well, the counterparties are in real trouble here because, on the one hand, their instinct, I'm sure, is to just say, forget it. Just like, we're done. You let us know what the number is and we'll deal with it then. But obviously, that has incredible complications for their domestic economy. So they're going to have a negotiation with the United States. But the complexity is bewildering. The changes are complicated. A lot of those reciprocal tariff deals, again, are based on this IEEPA statute, which is going to be reviewed by the Supreme Court starting November 5th. That might change altogether. So again, for governments, they have to engage, they have to negotiate, but it's unclear for them, what are we negotiating over? And if I get a fantastic deal on autos in this case, and then heavy trucks come into effect, does that cover heavy trucks as well for me? Probably not. But does that mean that I need to make a new negotiation to deal with heavy trucks? I think this is completely uncertain. And you can imagine that trade partners are waking up every morning, very nervously reaching for their phone to see what is the new information that has come in overnight from the United States.
What about domestic businesses? Are we going to see more legal challenges against President Trump's new tariffs?
I think it's possible. I think the real challenge, though, for these newest tariffs, these sector-specific Section 232 tariffs, is that they're officially done for national security purposes. So now how exactly your sofa in your living room is a national security threat is unclear, but nonetheless, that's the justification. That is very hard to overturn because the court gives very wide leeway for national security. Congress, which has done nothing anyways, is going to say that's not our prerogative. That is the president's prerogative. So I think these national security tariffs will be very hard to argue about.
Deborah, talk to us about how there has been already that bypassing of trade, right? Given how economies such as China, potentially, they are seeing that they can't export to the U.S. anymore. We talk about the China Shock 2.0, 3.0. There are dual risks at play here, including for Southeast Asian economies. What have you been seeing in the realignment in the past couple of months?
On the corporate level, it's starting to accelerate. So companies at the beginning of a lot of this sort of froze in place and said, well, let me just see how this evolves. We'll push as much inventory into the U.S. as we can, and then we'll wait and see. At this point, it seems quite clear to companies that you're going to be dealing with a high tariff environment and an uncertain environment for a very long time. So firms are increasingly looking to pivot. Now, that doesn't mean that they're pivoting overnight. Some are. Many of them don't have that option, but they're certainly exploring whatever possibilities they have. Now, we will see, and we are seeing in the supply chain space, increasing rerouting of trade. And that will, I think, continue and it will accelerate. On the government level, it has been more challenging than perhaps people would anticipate to create coalitions to deal with trade in other venues. In other words, how can we create new trade opportunities for our businesses outside the United States? But I think that is also accelerating. I mean, this is the week in which ASEAN's having its economic ministers meeting, and there was a lot of discussion in ASEAN about how do we beef up our internal ASEAN trade? How do we do so with our partners in Asia, who are all part of the Regional Comprehensive Economic Partnership? How do we accelerate progress on this 4-year-old agreement? That, I think, is going to continue as well.
And this could also figure into the conversations that are coming up at the APEC event next month and the ASEAN summit as well. Deborah, great to get your insights. Thank you so much for coming on our show on what I'm sure is a very busy morning for you. Hinrich Foundation Head of Trade Policy, Deborah Elms. Let's take a look at how Asia benchmarks are faring. We did see, for example, on the S&P 500 futures, that knee-jerk reaction to these tariff announcements. We are looking quite averse of risk at the moment. And in the Japanese equity space, this is coming despite that relative weakness you're seeing in the yen. The TOPIX is holding quite flat at the moment. The key drag to the markets today seems to be South Korean stocks, and Australia is about 0.2% down on the benchmark in the country. We'll continue tracking these market developments. We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how some pharma stocks across Asia are trading right now after President Trump announced that from October 1st, we would be seeing 100% tariffs on pharmaceutical products. We have a few names across the board in Japan, including Takeda, which is down 0.4%. Of course, a lot of cooperation also with U.S. companies. But what this means also for other regions like India and European countries that export pharmaceuticals into the United States is going to be a big question, Avril.
Yeah, and as our guest Deborah was talking about earlier, there is that realignment of trade that is already underway. As we continue tracking these market moves in pharmaceutical-related stocks, let's also talk about investment opportunities and challenges. Our next guest runs B Capital, a VC firm which manages $9 billion where they look into tech, AI, and healthcare. The firm has invested in more than 200 early to late stage portfolio companies. Let's discuss the VC investing landscape with Chair and General Partner Howard Morgan. Howard, very nice to see you.
Nice to see you.
Great to have you in the studio. So you're coming in on a morning in Tokyo where we're getting these headlines on pharmaceutical tariffs. So we have to ask you, I mean, when you look at the policy making coming out of the U.S., how do you factor that in as an investor?
It's very difficult. First of all, we know that, as the old saying goes, this too shall pass, which is that this may be for a year, 2 years, 3 years. It's unlikely to be very long term. And secondly, most of our investments are not in drugs themselves, but in drug discovery and the earlier parts of that journey to get a drug. So none of our companies will be directly hit by the tariffs at this point. But it is definitely something that's going to hurt because we do invest across Asia, in Japan and India and Singapore and so on.
When it comes to drug discovery, for example, we know that R&D has also been hit with these ongoing tensions between the U.S. and China. Is that something that you're seeing when it comes to a lot of these professionals in the field?
We are seeing that, but we are seeing a lot of companies that have U.S. operations and technology in China, and those are less affected. We're still able to take the technology out of China and bring it to the U.S. and Japan and other markets and in the drug discovery area.
A lot of the tariff push from the Trump administration has been about protecting American industries. How supportive do you see it as, really, levies aside, the kind of perhaps regulatory landscape in terms of supporting American healthcare, and how does that affect the way you look at investing?
Well, there's been a big push in the U.S. to lower pharmaceutical costs. Clearly, tariffs of 100% don't necessarily do that, so that's a little tricky to say. I think that it will help the American manufacturers who mostly do not package their drugs in America. There was incentives to package in Puerto Rico and some American territories, which were used pretty heavily for a while, but that's sort of faded as we got to true globalization. So this may push us back to doing more in the U.S., and I think that would be a good thing.
Talk to us also about tech investing, which you are very heavily involved in. I mean, how are you picking out the future market leaders? What are the metrics for you?
Well, we want to see companies that are using AI effectively, because AI is critical to anything people are doing. And we want to see companies that have very large markets. And we're seeing that in healthcare. We're seeing that in robotics, where Japan actually has some very interesting places to invest. And we're seeing that in the use of AI as a vertical market, for example, in legal, in marketing, in other areas. And so there's huge opportunities, and also in the space and defense areas.
But also when it comes to regulation in the tech sector, continuously evolving and sometimes pretty behind some of these new innovations. Is that something that you think about when you look at the different companies that you might be interested in?
We always worry about whether the federal governments, not just the U.S., are going to put in some regulation. In AI, we saw one state try to regulate use of AI, and it was overturned by the courts. It's too early to regulate, I think. We always find that if the regulators come in too early, they quash innovation, and we're all about innovation.
And you're seeing those opportunities here in Japan. Where else are you finding them?
Well, we find a number of them in India. We have a robotics company which we found here in Japan. It's actually based in Singapore, Eureka Robotics, and we find them in the healthcare space. We looked at a company yesterday, my partners did, in Kyoto, that's doing an interesting discovery of anti-cancer drugs. So there are lots of things happening here in Japan. In addition, in the robotics area, Japan has always been a leader, and we see interesting things, particularly robotic hands. One of the hardest things to do for a robot is to manipulate its hand, and so we have, the human hand has 26 degrees of freedom, and the robots right now, the best we can do, and our Optronic has 20, Tesla has 19. So we're trying to find out people who are making great hands.
Well, that's an interesting take. Hands are so important. But what's interesting to see this divergence with perhaps how innovation is changing the landscape in China and Japan, where China has been very much focused on these humanoids, yes, and Japan has been more industrial robots. Do you see that dichotomy, and is that something that you can play into?
We do. I mean, Japan was ahead. Remember, you had Asimo, you had the Sony Aibo early on. So Japan was way ahead in the humanoid space, and then fell behind because they were a little too early in terms of the software being ready. So now Japan, with Unitree and some of the other companies there, has pulled ahead. But they really can't sell in the U.S. because of the geopolitical area. So the companies in the U.S., Aptronic, which we're an investor in, Figure.ai, and the Tesla Optimus robots are going very, very heavily. Japan does, however, have a real lead in the non-humanoid robots, in using them in manufacturing. I mean, Toyota's been a leader for decades in robotics in manufacturing.
It's so interesting how the leads can continue shifting, right? You talk about all these investment opportunities in Japan. This is also a market that has seen a resurgence in the past couple of years. Does that make it more competitive when you're looking for investment targets? How is the landscape looking to you?
It's definitely become more competitive because the companies now are more globalized. At B Capital, we really try to help take companies global. So if a company starts in Japan, we want to be able to export its products into the Southeast Asia and into the U.S. And until a few years ago, a lot of the Japanese companies were building only for the Japanese market, and that was a little small. Now there's finally more incentives. Medi has done a good job of doing that to get more companies building for the global markets.
Yeah, the reforms and the supportive ecosystem, I think, has been very helpful. What does all this mean for your exit strategies?
Well, in Japan, interestingly enough, companies exit earlier than they do in the U.S. They can go public earlier, and that's a blessing and a curse because sometimes they go public early and the founders take the money and run and don't keep the company growing as much as they might. But it does give the investors a good incentive to invest in Japan because what our investors always want is to get some money back so that they can help reinvest in our next fund. And it's easier to get investors to invest in your next fund if you've given them back the money. Japan is faster than the U.S. in that.
You mentioned defense investments as well. How exciting is this field when we continue to see talk about more spending, whether it's across Asia or in Europe as well?
Well, look, we now have the Department of War again. I mean, it was a Department of War until '48. And the fact is that all the countries in the world want to have a good defense and good technology. And a lot of what we've seen in the wars in Ukraine and the wars in the Middle East is that these are technology wars. There are people, and unfortunately people are dying, but in far fewer numbers than they would have decades ago in a war. And that's because drones are there, automatic guided missiles. We have a company called Havoc.ai that makes unmanned surface vehicles, 10-meter boats that sail around with intelligence apparatus on them to survey things. So there's big changes, but it's a huge, huge field, along with space technology, which is partly defense and partly commercial.
Howard, you've been a long-time investor in tech. I wonder if I could get your thoughts about what's happening in some of these public companies. You have NVIDIA, for example, investing heavily into OpenAI, and that's raised some concerns that this is fueling a circular sort of financing. Is that a concern you think that we should be a bit more aware of?
Well, this is a different kind of bubble. I've been through 5 or 6 bubbles over my 50 years in investing. And in this case, when you have a company like OpenAI that got to hundreds of millions of users in months, that's very different than the bubble we saw in the 90s, where you only had 100 million users across the world on the internet. So I don't think it's quite circular. I think NVIDIA is a spectacular company. I mean, I've been a personal investor in it, just to let the viewers know. I also think Meta is a terrific company. And these are really making AI available to the user. I can ask my glasses what I'm looking at, and it will tell me exactly what I'm looking at when I wear them. And it will now translate English to Spanish, English to French, so I can be talking to someone who's talking Spanish, and in my ear I'm hearing the English. Those are real needs and real uses. So it's a little different than the bubble. In terms of the circularity, with NVIDIA investing in OpenAI, investing in NVIDIA, that's always happened. You've always had the big tech investing in one another, and I don't think that's necessarily a negative thing.
Especially with this AI transformation, that it seems we're in the early innings of. Howard, it's been fantastic chatting with you. Thank you so much. Howard Morgan is chair at B Capital. We'll have more ahead on the Asia trade. This is Bloomberg.
We're following the markets and the reaction to President Trump's new tariffs, of course, on everything from imported trucks, about 25%, not to mention kitchen cabinets, also vanities, also pharmaceutical products. When it comes to pharmaceutical products, we're talking about 100%. And, of course, the implications will be big for a lot of those pharma names across the Asian session. Take a look at how Japan is trading, because we're seeing a lot of downside, of course, with the latest on these tariff news. Some of those names across Japan, across South Korea as well.
Theirs will be in focus, and take a look at, aside from what we're seeing in the benchmarks, these are some of the movers that we are tracking. Of course, when it comes to pharmaceutical tariffs, we did hear about Trump saying that there will be exemptions if the construction has already begun in the U.S. So that is a bit of something that we have to sift through when it comes to these specific names that export into the U.S. And of course, we're not just tracking pharma names. There are some of these furniture-related stocks that have been in focus as well, along with the truckers in the industry when it comes to Japan and South Korea.
I do wonder if President Trump knows how popular those Toto bidets are in the United States, but that's one name that we'll be following. Coming up is Bloomberg Tech Asia. Don't miss that. We'll be talking about robo-taxis. This is Bloomberg.